Monthly want to update the S&P 500 view using the emini futures contract and provide a trade plan for the trading day ahead, identify some key trade levels and price objectives. So we're going to break this down through multiple time frames, starting with the weekly time frame. We want to check in and see where we are in terms of the weekly volume weighted average price to give us an indication of the higher time frames trend. And we can see that 55.87, we would need to be trading below there to flip the volume weighted average price bearish on the weekly time frame. So that's a key level to keep in mind on the weekly scale. Moving to the daily time frame, can actually see just now that price is testing and has just flipped bearish. We have a weekly volume weighted average price coming in at the 56.76 level, and we just traded below there. So we don't get a confirmation, obviously, until the close of trade today, but it is noteworthy. We do have this momentum divergence in play, and the stochastics are negatively orientated at the moment. But really, as we're trading above that weekly price level, we don't want to assign too much to the daily scale until we get that weekly confirmation. Then we can really start to think about meaningful downside objectives. So for now, just getting some warning signs in terms of the near term price action on the daily time frame. We have been trading inside a very tight range for most of this week, which is indicative of summer trading, and so it's not an unusual scenario, and we can see quite a bit of consolidation and range trading. Certainly for the remainder of this month and potentially into next. Although I would note that moving into the back end of July and into August, and certainly as we get into earnings season, we often see an uptick in volatility, and that's also confirmed by seasonal patterns with respect to presidential election cycles as well. I'll be talking more about that in future updates. So that's what we've got in terms of the higher time frames. Moving to our weekly trade plan, which was shared on Monday. See where we are there. We have had the rejection again from this 57.12 to 57.24 area that highlighted at the beginning of the week. I was actually long yesterday into that area, looking to see if we can break through there and trade up into the ultimate objective, which is our 57.50s to 57.60s. But once again, we've been rejected. And again, this is just indicative of this potential range trading. And so, key area to pay attention to in terms of the weekly trade plan is going to be this 56.40s to 56.30s. You can see on the book map here, getting a bit of volume developing into that 56.50. So potential buyers lurking there still. So any movements there in terms of if on a swing trading time frame, I'd certainly be watching for bullish reversal patterns there to play to the long side and looking again for that weekly upside objective. If we do lose the weekly bull bear zone, so if we start to trade below the 56.20s, then we'd be using that as a resistance for our downside target for the week, which would be into the 55.40 to 55.30 area, which is the high volume node on this 4 hour profile. So keep that in mind in case things do get a little sloppy in terms of price action at any point. Heading to the daily plan, the daily setup, we are looking at bull bear zone now that has 56.92 up to the 57. I'd actually like to see 57.03 there, which is that value area high. So 57.03, and you can see 57.05 has a little bit of liquidity but developing as well. So any pullbacks into that area, initially today, I'll be watching for exhaustion patterns or delta divergence on the intraday timeframes. That could set up a test into our weekly bull bear zone, which I'm using as the daily support zone. So if we get rejected on any move back into the 56.90s to the early 5700s, bearish reversal patterns there can set up then a three-legged corrective move. Let me just draw in what I'm talking about here to be specific. We've got this internal trend line value area high, which right could provide some initial support. I would certainly at this stage be watching for the potential for another leg to the downside into our weekly bull bear zone, where we want to then be thinking about long positions, targeting the break back through the daily bull bear zone and onto our weekly upside objective. At this stage, like I say, it would take a loss of this 5620s to suggest we will see more meaningful downside. So for today, I want to pay attention to resistance into the 5690s, early 5700s. Rejection there. We target the move down into our weekly bull bear zone, which is our daily support zone. And from there, I'd be looking to engage on the long side for the upside objectives as discussed. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.